Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network, and we've got a market head 3 days down as we talk about this trade on a Friday. It's end of month. It's hard to believe that tomorrow is already the 1st of June. We'll talk about what the South did, and were they the ones that kind of enticed everybody to do some selling early? And of course, some softer cash. A lot to look at as we do this week's Cattle Call. So Brad, let's kind of start out. What's your thoughts on this down market we've been dealing with?
Well, first of all, you are like a trooper, okay? In case people don't know that. Okay. Susan just had her knee replaced, and here she is. We're going to talk markets anyway. Good for you.
Yeah.
I wish you a quick recovery and take some pain meds and go take a nap as soon as we're done, right?
That's exactly what I'm going to do.
Thank you for having me on. Yes, I think you did kind of cover the highlights of what I think is happening here. I guess let's start with the cash market, which I was disappointed when the South kind of went, traded cattle $1 lower. That's just what it was. Basically at 186 after last week was the dominant trade was at 187. I don't know why. I'd say, if I had to look at the distribution of the supply of cattle, and I'm doing my best, but of course I don't know exactly, but obviously we try hard to get information like this. The sense I get is that Texas has some cattle, not an overwhelming supply, but they have enough. Okay. So that they don't maybe have much leverage. Kansas, probably a little less supply than that. I mean, not like they're tight, but have got a few more cattle. The North, the trend is still the same. The supply of cattle here, what traditional North would be north of I-80, extremely tight. Showless, very small. And so you can still see that there's leverage up here a little bit in the North. The best I've heard here today is 192. Last week there was just a little bit of 93. So yeah, just a tick softer. Still much higher than what the South is getting. So I think that kind of set a little bit of an undermining undertone here to the market, perhaps. But month end, I'd hate to tell you, I used to have a statistic in front of me. How many times month end the market's lower? It's ridiculously, it's maybe 90% of the time. Don't quote me, but it seems like the vast majority of the time, as funds even up or whatever it is, there seems to be a tendency to be a little bit lower.
So do you think the South, because they kind of gave in early, do you think was part of the tone factor that leaked into the North?
For sure, because when you got the North this much premium, it becomes a freight issue, So if you're a packer in central Nebraska, can I cheaper buy cattle out of Kansas at 186, or do I have to haul them for $5 more than that and then pay the freight on it and stuff? So certainly, now, I'm always a proponent of negotiated trade too, so the little tiny bit of cash trade that they do is so small in relation to all the formula cattle that they have down there that it still frustrates me that still seems to be what makes the headline then when they finally do trade a couple of cash cattle. But nonetheless, I throw this out there as a bit of an aside maybe, but being that we kind of glanced off and started talking about captive supply cattle. May is notorious for when people drink the Kool-Aid of the packer that, I'll give you $4 over the June. I'll give you $5 over the June. P.S. I got 192. June's are 181.50. We're 10.5 over the June today. Okay, but anyway, my point is that if you choose to do those basis contracts, you can do whatever you want. It's free country. I don't care. But please, then price the cattle, because if you don't price the cattle, they get automatically priced the day before the thing gets expired. You don't suppose that there's a coincidence that the futures break at the end of the month. I guess it's just, I have no proof, but you talk about anecdotal. Anyway, it frustrates me. I only mention it because I'd like to help people think harder and better about maybe giving those cattle away to a packer before you do it, when you believe only them. There are two sides to every slice of toast.
So I'm curious, as we get ready to hit this month of June, what are some of your thoughts that we might see moving in this cattle market?
I think we'll see generally two things. I think we're going to see, first of all, a market where the demand continues to be pretty good. Exports were good again this week. And I think domestically, whether we like it or not, there's two things about the domestic demand I think that are worth talking. I've said it before. Sorry, I'm going to say them again. I think that there's a segment of the economy or of the population that is going to eat beef. Okay, and price is not as significant to them. Now, having said that, I think the bigger thing is the one and only positive thing that I can think of out of COVID was that we moved the needle from retail to traditional, out of the H&R trade or the hotel restaurant trade where people went out for a steak. This whatever this generation is, it's Gen X or well, what are they anyway? These youngsters. Anyway, when they couldn't go out, they YouTube the video of how to grill a steak, right? And found out that holy cow, this is actually pretty good. In fact, it might even be better than a lot of these restaurants. And we can do this 2 or 3 times a week for the same cost that it was going out. So I do think that kind of demand has changed the spectrum a little bit. So that's the first side of it. Then the supply. Obviously you can tell I'm optimistic because of the overall supply of cattle. There's something here that I think we need to be careful about, and that is the average weights. They continue to decline so slowly. It's like they hardly are moving, right? That is the gorilla in the closet. And why are the weights this big? I don't know. I suppose I give you 14 reasons, but I think the big reason is the weather. Starting in February already, the weather was really good. We had a couple of weeks of winter, I remember too, in January. But there was no spring mud. It's still mild. It's from my own experience, I've sold calves already, 4 or 5 different deals of true blue calves. Okay, that came real early and they were big, but still. And the performance has been crazy good. So that's why they weigh that much. And so we need to. I don't think there's enough supply of cattle here in the short term, like say for June. But as you get deeper into the summer, there's always calves. Don't forget we had big placements in October, November, and they were mostly calves. We got to make sure that we pay attention here. If we get backed up on weight and then have some more supply, obviously that's a recipe for the packer being able to gain some leverage back. I would remind you and the others that even the bull market of my career up until this one, of course, was 2014. And go ahead and look at the charts if you want to. There was 2 big breaks in that thing, one and $14 break in the summer, and then we came back and still rallied $30 more. So it doesn't go up every day. It doesn't go down every day either, unless you're hawks. Then maybe they go down every day.
Oh, you had to get that in there, didn't you? All right. Well, grill this weekend as we kick off the month of June, and we'll catch up with you next week. But before we do that, what's the best way for folks to get a hold of you?
712-722-0023 or kkbtrading.com. Feel better, Susan.
All right. Thanks so much. That's this week's Cattle Call. Quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the Cattle Call on the Rural Radio Network.